Hey traders, Marcello here, founder of the Day Trading Academy. Today we are answering all your questions. Don't forget, if you guys have any additional questions, mark them with hashtag AskMarcello. I'll be happy to go ahead and answer any question you guys have about anything, trading, the markets, traveling, women, whatever you guys need help with. The first question here is from James Edward March. James, nice to meet you. James, I've heard you say quite a few times in various videos, podcasts, that you hate being told what to do. How do you manage your psychology in order to do what the market tells you to do? James, I think you're kind of mixing up the way that people actually look at the market and they actually trade. The market isn't necessarily telling you what to do. It's showing you what's happening, and then you make a decision as to what you want to do. Obviously the market is going to paint a story for you, right? There's only three things that the market can do, whether it's go up, down, or sideways. And you have a decision to make in terms of what you're going to do in relation to that. So, I've had situations where I've had really big trades, big losing trades, situations that are tough to admit. For example, taking time off trading because you've taken such a big hit that it hurts psychologically. A lot of traders who blow out accounts for the first time or the second time, kind of have to go back to sim in those kind of situations, for example. But I don't think it's necessarily the market telling me what to do as much as it is the stubbornness of knowing what you should do and not actually doing it. Having your plan that you're supposed to trade with and the plan that you're supposed to quote unquote follow, right? And not following your plan. So it's really more about understanding who you are. I made a video recently about, when you shouldn't day trade, basically being self-aware and knowing yourself. And I've seen traders really from all walks of life that are consistently profitable, students that have challenges learning. Raul, which is one of the newest master traders, it took him 8 years to become consistently profitable. Actually, it's 9 years, 8 before joining DTA, and then 11 months after joining DTA. So it's not a matter of the market kind of telling me what to do. It's more the stubbornness of not doing what I have to, and that kind of goes into what I'm saying about not being told what to do, so to speak, right? Because you have to wake up in the morning. You have to focus on what the market is doing. You have to, admit that you did something wrong if you have a big loss. In a few of the videos that I did recently, I talked a little bit more about the losses, because obviously it's important to discuss that, right? Where, I've had an 80,000 plus loss in 12 minutes or, those kind of things. So I hope that answered your questions, James. Let me know if you have any questions in regards to that. I'll go ahead and continue to the next question. Next question here is from Nathaniel White. Nathaniel, mucho gusto, as we say in Colombia. Does your course teach people who have zero trading experience, like people who don't even know trading terminology or understand candlesticks, etc.? And do you pay for references? So the second question is in terms of an affiliate kind of deal, and we do offer that, Nathaniel. If you want to send us an email, we can take care of that or explain to you how it works. Learning how to trade, I think that is something that is extremely personal. And I don't think that that everybody can necessarily trade the same way, because even though our master traders kind of teach you the system that we use, which I call it structure-based trading, where it's not quote-unquote rules-based trading, because everybody kind of adds their own style or their own kind of touch to it, right? So it's actually better when you don't have any experience, Nathaniel, because I think that the people who have experience have built up a lot of, let's say, bad habits and a lot of information that people don't need. I think at the end of the day, it's about reading the price action, right? You don't need indicators, you don't need software. At the end of the day, you have to learn how the market works. You have to understand how to read it to be able to trade it the right way. So it's better if you don't have any trading experience, because you haven't built up those bad habits and things like that, right? So very, very good question, Nathaniel. Following question here is from Ben. Ben, should we purchase tax software? And do you think tax ourselves, or should we hire a tax service for traders instead? Expensive. So I'm going to tread a little lightly here, Ben, because I don't want to quote unquote provide tax advice, right? It's the same thing when I talk about trading where, yeah, at the end of the day, I can talk about what I believe is best and things like that, but always do your own research, right? Always make sure that you make the best decision for you. Just because I say that I like silver or gold doesn't mean you should go out and start investing in silver or gold. In terms of taxes, one of the things or one of the best things that I can recommend for you, Ben, is to trade under a specific entity. For example, an LLC or an S-Corp. And the reason why is because if you have a specific entity, the only thing that that entity does is trade. So you can take advantage of the tax, I don't want to say loopholes, but you can take advantage of the good tax things that come with being a trader. So whether you want to do a tax software or do it alone, I think that's personal preference. I think you should probably just make sure you know or do sufficient research to make sure that you understand that side of it, right? Because an accountant or one of these tax services people will know a little bit better than us, or we might miss something. So I don't think that trade tax software necessarily is good to do. I would recommend actually finding a good tax professional, which isn't easy to find, but that's what I would recommend, Ben. And the other thing, you're worried about a wash sale. Question 2, for active traders, should we file tax as mark to market? I've read a bit about this. It sounds interesting, but I guess we'd have to trade a lot to qualify. You don't have to trade a lot to qualify, Ben, as much as it is you actually qualify as a trader. And from what I understand, the way that the IRS says is you can't, it's not a hobby. It has to be something that's frequent and serious. That's part of the reason why I would recommend you trade under a specific entity, because then you can prove that, if you log your charts, you can show, look, I'm not trading live, I can't show you the statements, but here are my charts every single day that shows that I'm taking this serious as a business, not that it's just a hobby, so to speak. So I hope that explains a little bit more for you, Ben. I know it's a little bit of a gray area, but since every situation or every person is different, I don't want to recommend that you do something and then have that not be the best thing for you. But those two things, I think, are the two best things that anybody can do in terms of making sure you're in the best situation tax-wise. Okay, very good question, Ben. Next question from B. Cage. I'm going to call you B. Nice to meet you. Do you offer a swings trading strategy? I'm new to trading, looking to open my first account, but don't have $25,000 to fund an intraday account. So I've thought about it and realized that it might be best to learn to swing trade successfully, build my account, and open up a day trading account with a good broker. So, the chair just dropped on me. So Ben, the first thing is you don't need $25,000 to trade intraday. That is only a regulation that covers stocks. That doesn't cover things like Forex and futures. So in the futures market, which is what we specialize in, you are able to open up an account with a minimum of $1,000. So you can intraday trade with that, and you don't have to have $25,000 to trade with, okay? Other than that, I personally believe, my opinion is intraday is actually better because you can have more practice to learn how to do this. I think at the end of the day, in order to learn how to do this, you have to be able to practice. And obviously, swing trading doesn't allow you the time to practice as much as an intraday trading strategy would. One of the things that we teach people how to do is how to understand or read the market. And basically what that means is it doesn't matter if you trade intraday or swing or what I'm doing more now of is position trading, where I'm investing heavily in miners and I'm holding really, really long term because of the demands that I have with the trading center here and the traders and the other businesses I have and the projects I have. So the key is always understanding how to read the market, B, okay? It's always about reading the market. It's not about software or indicators or anything along those lines. And once you understand that, you'll be able to trade any market in the world, whatever time frame in the world, right? So I hope that makes sense. And the very last question for the video is Roberto Castañeda. Roberto, thank you for these recaps. They're extremely helpful. I keep up with the news myself, but getting a viewpoint on how it can affect us as day traders really makes the info so much more practical, useful, and valuable. Thank you. The pleasure's mine, Roberto. You mentioned the new exchange, IEX Group, was created to combat the shaving off the top of the NASDAQ. So it wasn't to shave off the top of NASDAQ. it was to stop the high frequency trading, Roberto. So the high frequency trading happens in almost all markets. I'm not 100% sure if it affects Forex as well, but I know for sure that minimum 50% of the volume in stocks in the US is high frequency trading, so robots going back and forth. It got up as high as over 70%, but because there was 30% people trading, or pensions, whatever the case, and then 70% robots doing the high frequency trading, what happened was they started eating each other, and then it came back down to 50%. So NASDAQ is the competition of IEX, but it's not shaving off NASDAQ, so I hope that's clear for you. How does this affect the market, everyday traders? Thanks again for everything you do. God bless. So it's great for traders, Roberto, because they're trying to stop the manipulation in the market, which is great. And so if they're trying to stop the manipulation in the market, that's great for you and I, because obviously we lose less money from the manipulation. That's part of the reason, for example, that we trade with tick charts, so we can actually see the behavior and see the movement in the manipulation in the price. So it's excellent for us. It's excellent because they're trying to help the system be more even for everybody, for the little guys like you and me. So Roberto, thank you for the question. Thank you for the questions, everybody. Don't forget to leave all the questions with hashtag AskMarcello. I'll be happy to go ahead and answer any other questions you guys may have. And until next time.